Hello, everybody. Thank you so much for joining us today. Today, we're going to talk all about the EUDR, what it is, why we have the EUDR, and then we will talk a little bit about the processes and different stakeholders, different type of companies. Of course, as always, we will have a step-by-step approach, and we will see the government oversight. I am Laura, Head of Product here in Kodiak Hub. Super happy to be with you once more. I hope that you have joined us in previous webinars. If not, I am very happy to walk you through this very complex legislation. So let's begin. What is the EUDR? The EUDR is a legal framework. It has been introduced by the European Union in 2023. The whole idea of the EUDR, the whole focus for it is to reduce deforestation and basically police any products that are coming to the EU or any products that are leaving the EU. So it's both for imports and exports. It also has a focus on trading every single commodity that is associated to deforestation. So it's a very technical legislation as well, quite ambitious. Probably you have heard that the law was, or the implementation of the law was delayed by a year. It used to have a starting date on the 31st of December of 2024. Now the legislation will enter into place on the 31st of December of 2025. I do have to say, this is not something that allows companies to pause this implementation. This is a quite complex legislation, so we need to continue forward. Let's talk about the key features of this law. First of all, it's very much focused on a subset of products and commodities that are historically attached to deforestation: soy, palm oil, beef, coffee, cocoa, and wood. There is in the law, Annex 1, there has a very comprehensive list of all of the commodities that are included in the EUDR. So first step, go check Annex 1, check if you're using one of those commodities, if you're importing one of those commodities, or if you're exporting one of those commodities. Then the law has a very strong focus on due diligence. This is the process that is requesting, and the statement that is requesting is all based on risk management. How can we reduce deforestation impact in the imports? The legislation as well has a very strong focus on material traceability, especially geolocation of all of the commodities, as well as checks and penalties. Like in every legislation, it states what the member states must do to execute and implement this law in each country. So let's talk a little bit about the why. The law focuses on two things, the main reason behind it. The first thing is 10% of global emissions come from deforestation. Not only that, it also affects the capture of carbon, so it's double harm. Also, we have lost 10 million hectares of forests between 2015 and 2020. There is a large portion of biodiversity that has been affected. With that in mind, the EU, under the Green Deal umbrella, has decided to introduce this legislation to reduce deforestation. The mindset is that the EU must be responsible for any product, any commodity that they import or that they export. And this is something that is basically requested by the market. 64% of all global consumers are worried about climate change. This is something that is in everybody's mind, especially in the EU. We have also seen large sets of devastations related to climate change. We just saw the hurricane in Florida. We have seen horrific flooding in Spain recently. So all of these natural disasters that are related to climate change makes the public more aware, and it demands the market for change. And that's why 84% of EU citizens believe that this environmental legislation is necessary. So that means that no matter what, here this law is here to stay. And that means that we need to prepare ourselves, we need to answer on time, and we need to execute all of those processes to make sure that we're compliant. More to that, this law that is all about risk management, is all about due diligence, is one part of the equation. In Kodiak, we like to take this journey with our customers to make your supply chains a competitive advantage. The EUDR doesn't have to be only about compliance. It could be an opportunity to grow for your company. It can be an opportunity to bring stakeholder value for your consumers, for all of those other companies who are buying your products, but also for investors and even employees. Every single of those stakeholders are looking for a company who respects the environment and has good practices. So let's just not focus only on compliance and risk minimization. Let's use this effort to actually bring stakeholder value. And this is why Kodiak likes to partner with our customers to make sure that we can take that journey with you. So let's now talk about the how. I would love to hear from you to see what are the solutions that you're using or will you use in the future. That way, I also know a little bit about your needs and I can direct the webinar to some specific solutions if it's possible. So I see there's a lot of I don't know. Of course, this law hasn't started to be implemented, but we definitely need to use these tools. It's truly a little bit impossible to do it on your own. So let's give a little bit more time. I see that the I don't know is winning for now. Yes, of course. It is understandable that many companies as well will use their existing ERP system for this. The legislation is quite complex, so we will have to see if we need to implement more solutions. It's really quite important because it's very specific. You will see it on the step-by-step approach. All right, I think let's continue, but let's focus on the I don't know for now. So let's lay out the groundwork here. What is the first steps? As I mentioned before, this is all about risk management. The first thing that is requested by the law is to establish a due diligence system. So making sure that we basically have a framework or a process that will allow us to comply. This is it's easier to said than done. These type of systems are quite complex, and we need to have support and a process that is documented in centralized way. So every stakeholder that is executing those processes know what they need to do. So that's the first step. There's also a focus, of course, on reporting. These type of things are quite necessary for the transparency that this type of legislations are requesting. So it also means that you need to have at hand all of your results, the compliance checks that you have done, and of course, the mitigation actions that you have done. Finally, the legislation is actually quite explicit. We need to have document retention up to 5 years. I always like to say to our customers, it's not only about having the documents, it's about finding them easily, finding them in places when you have the government at your doorstep. So it's not only about retaining, but finding those documentation in the easiest way and in the key moment. So that's also very important. So let's now talk about the scope there. This legislation they designed it in a way that is quite complex. So I want to put a pause here and talk about the different stakeholders and the demands that they have. The first one is about operators versus traders. So what is the difference between one and the other? An operator is a company who is importing or exporting a product that is in the scope of the EUDR. So it's any company who is buying from a supplier that is outside the EUDR or selling from the supplier. They need to do the due diligence process, but also they need to send the due diligence statement. So these are the main focus of this law. But also we have the traders. Traders are companies or people who are buying the products that are already in the EU market. So they are not bringing the products, they are just consuming the product. They don't need to do a due diligence statement, but they do need to have a due diligence process. They need to capture the documentation, and also they need to keep the records as well for up to 5 years. So this is a bit complex, so I brought you 2 examples so we can put it a little bit more into practice. So let's say we have an operator, which is a French furniture company that is importing wood from a supplier in Brazil. Those type of companies who are buying wood from another country, they are operators, and they need to do a due diligence, and they need to submit a due diligence statement. Now, the customers of those companies, let's say a Spanish retailer who wants to sell that furniture, those are traders. They need to capture the information, making sure that everything is complete, doing their own due diligence, but they don't need to do the due diligence statement. Another example is, let's say that you're buying soy to feed cattle in the Netherlands, and you're buying soy from Argentina for milk production. This company, this dairy company, are an operator, and they need to do the due diligence and the due diligence statement. So they need to make sure that that soy is deforestation free. But the trader, their customer, the German supermarket who buys all those dairy products, they don't need to do the due diligence statement. They just need to make sure that what they're buying is deforestation free. So in a way, they need to do their own due diligence process. So I would also love to know what type of companies we have here. Are you an operator? So that means, are you bringing a product to the EU or exporting a product to the EU? Are you a trader that's just buying and selling products already placed in the EU, or you're both? It's also important for us to know if you don't know, because that means that we can help you define a little bit what are your needs there. So I see that we have one operator and 2 companies who are actually both. Let's see a little bit more of answers there. Yes, I believe both will be the main use case, which that means that we will have to implement 2 different processes. That's also something that is important for us to know, right? One for one commodity, one for another. One for a commodity you're importing, and another one for a commodity that you're exporting. So it makes the due diligence more complex still, because you need to keep track of which process for which commodity and which product. Oh, right. Perfect. Thank you for your answers. I think we have a good, I am glad that I don't see any I don't knows. That's also important. But let's move on. We also have the size of the company to think of. The law, because I believe they understood that this is quite complex. They are making sure that small companies and medium companies have an easier way of complying with this law. Larger companies, on the other way, they have it a little bit more difficult. So I will not go into the slide. This is just as a reminder. You can see the legislation. This is basically a way for you to classify your company. You need to comply with 2 or more of these buckets. So for example, for you to be a medium-sized company, you need to have less than 250 employees and a net over of less than, 30 million. So that means that you will be a medium company. So keep this into consideration because the processes are not the same for large companies to SME. So this is quite important. And let me make that differentiator. Let's start with large companies. Operators, of course, they are the companies that need to do a larger system and they have more responsibilities. The first thing, of course, is the due diligence, making sure that those suppliers have minimum risk or no cause of concern. They need to submit the due diligence statement to the EU. As every single stakeholder, they need to record keeping. Remember, 5 years where you need to find any type of documentation at any given time. Risk mitigation is a big part of the legislation as well. And of course, reporting. That's are for those large operators who are bringing or exporting goods to the EU. Traders who are just buying those goods, they need to verify that the due diligence is done. So basically, they need to do their own due diligence. They need to record keeping. And of course, they need to provide information to the authorities if requested. I also think traders should have risk mitigation factors. Let's say that they have a good supplier, that maybe they're missing some information. That's a corrective action plan. Sometimes these legislations, they forget that it's not so easy to change a supplier. So it's important for you to work, if you're a trader, work with your suppliers so they are compliant. Especially now that we have a little bit more time, it's time to foster those relationships and make sure that you will have all of the information that you need. So let's now talk about the small companies or smaller companies. Operators have the possibility to have a simplified due diligence. It's not in every case. They need to have evidence that other operator have done the due diligence already. They can use the due diligence as a reference, but as once more, they need to keep the documentation. Small traders are the stakeholders that they are going to have less steps in this process. They need to, of course, collect the information, make sure that everything is correct, so record keeping, and of course, allowing the government to have oversight on their documentation. I want to be very, very clear. The law states that any operator and trader, no matter if it's big, small, or micro, if they have evidence that there's a risk, not even evidence of impact, risk, that a commodity that they are buying has a deforestation impact, they need to report this to the authorities. What is the meaning of this? It means that no matter how small your company is or how many commodities they're trading, you need to have a process to make sure that you keep those documents and that you can assess that if something happens, you have the tools to report it. It's not enough to say, I'm not going to work with the supplier and that's it. No, you need to report this to the authorities. So no matter how big your company is or the nature of your business, please make sure that you have a process and all of the documentation in case that something happens. All right, so let's go into the fun part. I will focus mainly in the law. I will talk about the law, I will talk about good practices. We will review from Article 9 to Article 13, and how can you be compliant for the EUDR. If you want to know more about our platform and how can we help you, no matter if you're an operator or a trader, please book a demo. You can just click there in the link. Please make sure to let us know if you're an operator or a trader, or if you're both or you don't know. That way we can do a little bit more of a tailored demo for you and make sure that we will cover your use cases. All right. let's see. Let's give a couple of minutes there as well. As I mentioned before, remember letting us know so we can prepare your use case tailored to your own needs. But let's now go into our proposed flow. This is what every operator that is large must do to be compliant with the EUDR. That's to say, traders must do this every single step except submitting to the assessment. And small operators and traders have a simplified due diligence that is pretty similar to this, but a little bit smaller. We will also see that. So take into consideration, operators and traders have a similar process. The change is the content of those assessments. So the first step is like, do you have a new commodity or you have a new supplier? Has this supplier been approved? Everything starts when you create a supplier. I cannot stress how important it is to focus on the practices of the suppliers at the first step. Article 3 of the law actually says that you need to make sure that the products are being produced according to the relevant legislation of the country of production. They have a new annex that it was published, I believe, a week ago. They also mentioned there that you need to check human rights, labor rights, rights of land, any claims or conflicts as well. So that's another documentation that you can reference. So, of course, when you are doing this supplier assessment and the legality of the whole process, you need to collect quite a bit of documents. You need to make sure that you do third-party verifications, what other people are saying about the supplier. Try to assess and evaluate those suppliers, collect legal documents, collect what the supplier is doing. And of course, because of this legislation, there is a focus on land rights as well as indigenous communities. You need to make sure that those suppliers are not in conflict with an indigenous community. Additionally to that, I always recommend our customers to take a look into their contracts, into their terms and conditions. Make sure that you have a safeguard that if the supplier is not complying with the legislation, you have a way to respond. And also that way they know what they need to do. They know what are the steps. And here's what all of our customers ask us the same thing. How can I do this when I have 1,000 suppliers? How can I do this when I have 5,000 commodities? Here is all about automation. Focus on your suppliers. Focus on what is wrong. Have a system that you can evaluate the suppliers in the easiest of way with your own acceptance criteria. So you are able to define before the supplier even answers what is good and what is bad. You can use what we call red flag detection. So basically focus on what is broken. Don't focus on what is right. If you have a system like Kodiak, you will be able to quickly know if a supplier has a red flag, something is wrong, the rating is very low, and that allows you to focus specifically on those suppliers. Collect evidence. Make sure that you ask for the supplier for KPIs, documentation, even pictures about their practices. And then, as I mentioned before, it's not easy to change a supplier. It is not easy to remove a supplier from your database. Focus on risk management. If you have a good supplier that they need to grow, they need to change, you can always use a system like Kodiak to identify them and work with them with corrective action plans and preventive action plans. I have said this a lot and I will keep saying it. Documentation, documentation, documentation. Everything that has to do with due diligence and risk management is about documentation. Have everything in one place that you can find. Remember, you have to save this document for 5 years. And finally, if you're doing an assessment, make sure that all of your data is in one place. It is very difficult to evaluate a supplier with 100, 150 different data points that are all scattered and that they don't have a comprehensive evaluation system. human beings are more subjective than mathematical. The user will not be able to have a good evaluation of the supplier without a system in place to rate them. So once you have your supplier, let's say that if that supplier was approved, then we can focus on the commodity. Of course, in this stage, especially if there's new suppliers, is when you can decide if you might not want to deal with them. You might end your relationship there. This legislation is very supplier dependent. You cannot execute certain things without them. You need to make sure that they are the ones who have responsible practices. So if you have a new supplier, maybe you don't have a good relationship with them, close that. But if it's a supplier that is approved, is accepting your own criteria, then let's focus on commodities. You can have different commodities provided by the same supplier. As I mentioned before, the law has a very strong focus on traceability and geolocation. What I believe is more complex, and maybe the legislation is not so clear about it, is the fact that you can have one product with different commodities from different places. So now you need to keep track of that. And that is a big leap for relational data. And this is why it's good to have a products and service system that is integrated with your supplier relationship management system. Because that way you will know which commodities you have, that which products are related. Remember that your customers, especially if they're traders, they need to be compliant too. So you need to make sure to know which documentation to attach to each product that you're selling, and make sure that you have all of that documentation in one place, fostering the power of a relational data system. Once you have created the commodity and it's approved, you have created the supplier and it's also approved, this is when we start capturing the specific information for the due diligence statement. So there's an Annex 2, says exactly what are the information that is needed in the due diligence statement. There's also an annex, this annex that I mentioned that it was published last week, that gives a set of questions. So let's focus first in the data requirements. You need to focus on the operator information, so their name, the address. This is if you're a trader. Of course, if you're the operator, it's your own information. You need to have a harmonized system code. That's also part of the Annex 1, so you can codify which of the commodities that you need. You need, of course, a description of the product and the commodity. If it's wood, you might want to use also the scientific name. You need to have the quantity, how much you are importing, where are the location of those plots of land. For cattle-related products, it's a little bit more difficult, but they have a system like a diameter that you need to provide as well. And you also need to know and basically submit in the statement if there's multiple plots for production. Finally, if that particular product is also attached to other due diligence statements, you need to have that reference number. So that means that you need to work very closely with your suppliers to capture that information as well. Once you have that, it is important to have everything in a very easy way, not only for your suppliers, but also for your internal stakeholders, and more importantly, to be able to show this to the government if they come to audit your company. So what we always recommend to our customers is to set up a flow, a process that is repeatable, that you can update when you need, and that it will register every single action. So that way, if something happens, you know where to find information, you know that every stakeholder knows what they need to do, and you just need to basically follow that step-by-step guidance and comply and provide all of the documentation. This is very, very important. Not, as I mentioned before, not only for the user or the supplier, but also to demonstrate to the authorities and to your own customers that you have a robust system, that is repeatable, and that you can demonstrate the results. So once that is all gathered, we start with the evaluation part. The first step is the country evaluation. The country is super important for a supplier evaluation. It is basically what defines the probability of a supplier to have bad practices, and the legislation recognizes this. The first thing is that they want to set up their own country rating. We're still waiting for publication for that. It has become a little bit of a political issue. Developing countries who are concerned about the EUDR has actually requested or demanded that the EU doesn't name them as a high-risk country. It has become quite difficult political issue. So we are still waiting, all of us. Hopefully they will send this ranking of countries soon. Additionally to that particular ranking, there's other indicators that are country level that are important. From, of course, forest and forest degradation, to levels of corruption, human rights, the rule of law, how, if there are any armed conflicts, there is an evaluation of the country. And this could be very time consuming. You shouldn't go and look every single database on your own. We have a system in Kodiak that compiles 39 indicators from the best sources. So you can do this in an easy way. Because it's not only about having the source, it's also being able to compare one source to another and one indicator to another. So this system allows you very quickly to know exactly how you're going to do your due diligence. And by the way, this model is really useful not only for the EUDR, but also for any due diligence law, from the CEST to the Norway Transparency Act. It allows you to focus on which are the suppliers with the highest probability of bad practices. So as I mentioned, you can do it on your own, but that means that you will have to go and check all of those indicators, compare them, do your own ranking. So it's better to focus on the due diligence itself. Once that's out of the way, now you can start analyzing the supplier themselves and the commodity. Both of them are important. So the legislation pretty much has 3 stages: verification and analysis. So companies must verify and analyze the information. Everything is in Article 9. Just make sure that you don't have any high risk and that all of the information that the supplier is providing you seems to be accurate and that nothing is missing. Then you do the risk assessment, as I mentioned. You start checking the legality of those documentation, make sure that they are providing complementary licenses, like, for example, for wood products. And something that is actually quite important is an analysis of how complex the supply chain is. In this recent annex, they also have a definition of the complexity of the supply chain. This is pretty much the law recognizes that the farther away you are from the raw material, the more difficult it is to assess that is a risk product. So once more, all about the relationship that you have with the supplier. How are you going to capture that information? How are you going to make sure that you execute that throughout every single level? So again, relationship. And finally, as always, documentation and review, making sure that you have all of that documents in one place. This is actually comes from exactly this annex of the law. These are some of the questions that the stakeholder who's assessing this legislation has to check mark. So it goes from where is the commodity produced, to how complex the legislation is. So please check that out. At the end, what you need to assess as an operator and the stakeholder is, do you have any cause of concern? If you don't, that means that there's basically a low risk and you can submit the due diligence statement, you can bring the products into the EU. If that's not the case, if there's some concerns, then you mean that you need to do mitigation risk or report to the authorities that there has been deforestation for that particular commodity. And of course, you cannot bring it into the EU. It will not be allowed. So once all of this process has been done, you might do that mitigation risk. That is when the operator, only the operators, need to do the due diligence statement. And here is very important. You can do it in a manual way. You can submit it manually through this system that the EU hasn't really published. They are in a pilot testing phase. There have been some progress there. Or they are also going to have an API integration. Of course, our system is going to look into it. The documentation is not there yet. So we will see how this evolves from the EU side. So there's two ways. Traders, as a reminder, they need to do the whole process, but they don't need to submit this into the legislation. For small traders and operators as well, you can do a small due diligence. So it's, as you see, very similar. You need to assess the supplier, assess the commodity, capture the information. If their commodities in a low-risk country, you don't need to supply anything, just have the documentation in case the government requests that documentation from you. What is the important part here? It doesn't matter how big your company is. It doesn't matter if you're an operator or a trader. You need to have a repeatable process and a repeatable system so you can demonstrate that you can do this at any given time. Because please remember that it doesn't matter how big your company is. If you find a risk, you need to report it to the authorities. So basically, everybody requires to follow this law. Now let's talk about a little bit about government oversight. The member states have very clear obligations for this law. We have lower risk, standard risk, and high risk. So remember, the countries are divided like that. For every single company that is bringing commodities from low-risk countries, the government has to check at least 1%. From standard risk countries, the government has to check 3%. And for high-risk countries, they need to check 9%. So this is by commodity level. What it means is that you will need, there's more possibilities for you to be audited. Also, because the EUDR hasn't published the country division, right now, all of the countries are being treated as standard risk. So it's 3% of all of those companies to be audited year after year. So we need to be very much prepared. Something that is important to know is what is the government going to check? The first thing is how the company is assessing and reducing those risks. So your process to identify the risk, but also how you're going to mitigate. What are the documents that you're capturing? And of course, the supplier practices and vulnerabilities. Something that is important for you to know as well is that some products actually, they will request more documentation. They might even do some scientific tests to make sure that the commodity comes from the specific origin. And they might even do some field audits in other countries, depending if the country agrees to it or not. So the EU is going all in with this law, and they're requesting quite a bit of resources from companies. So this is what we brought you here today. I hope it was an overview. As I mentioned before, it is quite complex legislation. So I would love to see you. Maybe we can do a demo for you. Really focus. Let us know what is the type of stakeholder that you are. That way we can prepare a tailor demo for you. And we can even prepare the 2 different use cases. Let me see if we have any questions. I don't believe so. You can write there if you have anything, or of course email us and we can see how can we help you to be compliant. The last thing that I will say today, I know that we have 1 more year, but it is so important to start implementing this now so we are not caught off guard. Thank you very much. You have the slides in the handout, so you can also take that, check the processes for your own companies. And once more, we're here for you. And thank you for joining us.